Hello friends, in this video we are going to discuss about the recent circular which has come in with regard to secondary or post sale discounts. Mind you, this circular would be applicable in only those situations where one is issuing a financial credit note. That means a credit note which is basically not containing any element of GST. So let's say I am the supplier and Mr. X is the recipient. So if I am supplying to Mr. X, the question comes in first whether uh, Mr. X, who has taken the full ITC on the original supply, and if I am issuing a financial credit note to him for reducing the value of supply, let's say original value of supply was 1000, now I am issuing a credit note for 10%, which is for 100 rupees. Now he has already paid GST of 1180. He has already paid GST of 180 to me, which I have already deposited to the government. Now let us say if I issue a financial credit note of 100 rupees for reducing the value of this 1000, whether ITC also of 18 rupees is required to be reversed proportionately. So here it has been clarified that one supplier, first of all, they are referring to the circular 92, which says that supplier can issue a financial credit note, wherein if I am issuing a financial credit note, I will not be liable to reduce my original tax liability. However, the question comes in whether recipient would be allowed to reduce their tax liability, would be required to reduce their ITC. So it has been now clarified that transaction value was not reduced on account of financial credit note. Accordingly, the tax charge from the recipient would also not get reduced. Since I have paid taxes on 180, the recipient has availed ITC on 180, my output tax has not reduced, so his ITC would also not be required to be reduced. So it has been said, thus it is clarified, recipient will not be required to reverse the ITC attributable to discount on account of financial credit note, as there is no reduction in original tax value of the supply. I'm sure this will clear up a lot of litigation where the department has been uh, requiring the recipient to reverse their ITC because of financial credit notes. Next, whether post-sale discount offered by manufacturer to dealer would be treated as consideration for the dealer's supply of the same goods to the end customer as a monetary value of the inducement to supply of goods manufactured by him to the end customer. So let us say we are talking about three persons, X, Y and Z. X is the manufacturer, Y is the dealer, Z is the end customer. Now let us say there is a X is an automobile dealer. Now, as X decides during the time of Diwali that they want to issue a, uh, they want to reduce the value of certain cars. Now, the dealer has already bought those cars. Now, X to Y, the supply has already taken place. Now, if they want to reduce the value of supply, they are reducing it by what they are doing is they are asking the dealer to reduce the value of a car by, let's say, 1 lakh rupees. So manufacturer would be passing on the benefit of 1 lakh rupees to the dealer and dealer would be passing on to the customer. Now the 1 lakh benefit which is passed on by way of financial credit note by manufacturer to the dealer, the question comes in whether that 1 lakh rupees would be considered as a supply and would be added to the value of supply between dealer to customer. So dealer to customer, the price may be 10 lakh rupees. 1 lakh rupees is now reduced. So now the supply is happening at 9 lakhs. So 9 lakh rupees is paid by the customer, but 1 lakh rupees is basically reduced by the manufacturer in the hands of the dealer. So whether this 1 lakh would be added to the 9 lakh which is paid by the end customer is the question. So it has been said, in cases where there is no agreement between manufacturer and the customer, which is expected, between the automobile manufacturer and the end customer, there is no such agreement. Then there are two independent transactions. One is from manufacturer to dealer, which is X to Y, and Y to Z, which is dealer to customer. The essence of the matter is that for a contract of sale, sale is completed on transfer of title to the goods to the buyer. So sale is completed when the goods are transferred. So buyer becomes the owner. So when X has sold to Y, Y has become the owner of those goods. Once this happens, Y is the owner. X does not have any claims. Dealer takes ownership of the goods purchased from the manufacturer and subsequently sells them to the customer. And transaction between manufacturer to dealer is also on principal to principal basis. So benefit is enjoyed by both manufacturer and the dealer. Manufacturer is passing on to dealer and dealer to the customer. So there is ownership transfer from manufacturer to dealer and from dealer to customer. These discounts are simply given for competitive pricing to push sales and merely reduce the sale price of the goods, and are not linked to any independent activity rendered to the manufacturer. So that means it is only for pushing sales. So in other words, this is for competitive pricing. So this has been said that this discount is only reducing the value of price from manufacturer to dealer and from dealer to customer. This means this 1 lakh cannot be added to the consideration received by the dealer. So dealer will still charge on 9 lakhs. Manufacturer would be giving a credit note, financial credit note, and dealer would be charging to the customer GST of 9 lakh. 1 lakh would not be added. Having said this, if there is any agreement from manufacturer to customer, that means from, let's say someone is buying cars in bulk from the manufacturer or buying any goods from bulk from the manufacturer. So customer is having a direct agreement with the manufacturer. So customer, let's say, has sold goods at 10 lakh rupees to let's say the distributor. Now distributor was supposed to sell at 15 lakhs in every case, but because there is an agreement between manufacturer and customer, he is selling at 13 lakhs. So 2 lakhs he is selling at a lower price. Because of that, manufacturer is passing on the 2 lakhs benefit by way of financial credit note to the dealer. In such cases, it has been mentioned that here 2 lakh rupees of benefit which is from manufacturer to dealer, this 2 lakh rupees would be added as consideration in the hands of the dealer. So he would be charging GST not only on 13 lakhs which he is realizing from the customer, but also on 2 lakhs which he is getting from the dealer. So who will dealer be charging taxes to? That is something which is, according to me, going to be a little bit tricky in this circular, because this circular says that it would be treated as supply of goods from dealer to end customer. So ideally this is saying 2 lakh rupees would also be charged by dealer to customer, which is 2 lakh rupees. Now customer has paid only 2 lakhs, only paid 13 lakhs. Whether they would be ready to pay 2 lakhs GST on 2 lakh rupees is something we have to see, or whether this 2 lakhs GST also is passed on by manufacturer and is paid by manufacturer is something which is going to be a little bit of a tricky aspect. Next, another aspect is with regard to post-sale discount by manufacturer to dealer. Here there is no customer involved, here only manufacturer and dealer. Now in certain cases, in order to boost sales, what happens is the manufacturer says that I am going to provide you this discount. So manufacturer is giving a post-sale discount to make sure that the price of the goods reduces, but it is not linked to any independent service. So manufacturer has said to the distributor, I have sold at 10 lakhs, now I am going to give you a discount of 50,000 rupees. Whether this 50,000 rupees would be considered as consideration in the hands of the dealer, because dealer, this is considered as promotional incentive or discount, whatever it may be, promotional discount, let's say during because of any reason. So whether this amount which is passed on by manufacturer to dealer, whether this would be considered as consideration for any activity carried out by dealer. Here they are saying if the dealer, this is basically enhancing the sales of the dealer, right? So if dealer's sales is enhanced, so this is not supposed to be a promotional activity carried out by dealer on behalf of manufacturer. This is simply a change in the value. That means this post-sale discount will not be treated as a separate consideration paid by manufacturer to dealer, because this is dealer's own incentive to get more revenue out of it. Now, there may be certain cases when the manufacturer may pay the dealer for certain promotional activities which are specifically carried out. So if there is an agreement where there is a separate consideration defined, that there is some on-road campaign that they should be carrying out, for which they would be receiving 5 lakh rupees. If there's a clear campaigning, branding, which is not linked to any value of supply, but which is specifically stated to be a separate promotional activity for which dealer is receiving consideration, only in such cases GST would be applicable. This is, I think, a very welcome circular, which I think should clear up a lot of confusion. Having said this, a lot of these cases are also provided in kind, discounts, incentives which are provided in kind, for which 194R is applicable. Those have not been explicitly mentioned. Also, supply which is happening from dealer to the customer, dealer to the end customer, which I was talking about in this second case, is also going to be a little bit of a confusion, because the customer may not pay GST for the consideration paid by the manufacturer. So this is also going to be a little bit of a confusion. So I believe that though this circular is a welcome move, but there are some aspects which are yet to be clarified. So we hope that this issue gets cleared up as soon as possible. And this circular would definitely provide a welcome relief to those cases which are already part of litigation for the past, where the department is imposing tax on the dealer without looking at the transaction, simply because there is some sort of post-supply discount or financial credit note which has been received from the manufacturer. So let's see what happens. We hope for the best. Thank you.